Hey traders, John Hell here. Today we're going to be looking at the markets, and interestingly, we had a very nice pop to the upside with the Nasdaq, but also we had a little bit of movement on the Dow Jones and the S&P. We're going to be focusing on those three indices, but also going to be sharing with you what I'm looking at, say Amazon and Netflix and Apple and Microsoft and these different markets, and I've got something really interesting that I want to share with you and why this may be the start of devastation ahead. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into today's video. Now, let's actually start with the Dow Jones. The Dow Jones, because we're in one of the weirdest times ever, right? Dow Jones and the S&P don't look like anything like each other. The Nasdaq is much weaker than the other markets. It's like we are just normally they go very, especially S&P and Dow, they go pretty much in sync overall. But what's happening right now is we're getting a slight little decoupling between the Dow Jones and the S&P 500, especially those two indices, which generally don't last too long. So looking at the Dow Jones and looking at where we are right now, you can see what happened today. Today we actually opened. We rallied right up, we came down, and we actually closed lower on the Dow Jones. So we couldn't actually hold all the gains we had. Now it did rally up about, what's that, about 1%? And then it closed down about 0.1%. So we got a very sort of, a strong sort of rejection where we are. And this top line that we've got here is indeed, you can see this massive line is coming back to here. And we did eke out, did we eke out a new high today? So I don't think so. You see yesterday's high was 32,148 and this was 132,148, and today actually eked out a brand new high. So there you go. So yeah, so the high for yesterday was 32,148. The high for today was 32,150. So we eked out a new high, all-time new high for the Dow Jones. See, but you can see we actually rejected here. Now, the one thing that I'm noticing by looking at this point here is we're starting to get it's very frothy. It's getting very frothy. And what I mean by that is if I bring up my Dow, if I bring up my my charts through here, you can see how, let's just bring this up through here. You can see how we actually ran up and we're squeezing up into this triangle, into this pattern here. Now, we're either in two different situations here, and it's always hard to say. That first situation is that we're in this triangle pattern, we're going to break out, and this is just this is the start of what we call the melt up phase or the hockey stick phase. And that could be in the books right now as well too. When it comes to the Dow Jones, because we're still in that squeezing, we didn't break to the downside at all. We're just still in this sort of squeezing of this pattern here. So are we about to see a moonshot to the upside when it comes to the Dow Jones? But either way, wherever this breaks on the Dow Jones, it's likely to be pretty big. And with all the stimulation that's happening right now, the printing of money and the 0% interest rate, that's going to cause a massive hockey stick. But bear in mind, guys, there is going to come a point in time, I don't know when, there's going to come a point in time where we are about to see one of the most devastation crashes in our history. The biggest crash in history is coming our way. And again, it might not be now, it might be next year. You know what I mean? Like that may be the year it really starts, and we may see that hockey stick movement before we actually start to see that going on. But looking at the markets, guys, I'm telling you right now that this is going to end really badly. And if you think that, yes, that last year's crash for the whole cough situation was bad, then you ain't seen nothing yet, because now we've got all these new people coming in involved with the markets. The markets are high, markets are moving, markets are happening, and everything's high, everything's in big bubble territory. But when the music stops, this is going to be really bad. The question is, when's that going to happen? I don't believe it's going to happen for quite some time. I believe right now we're getting ready for a big movement to the upside in the indices. Now, I do expect to see some sort of a correction first to get people scared, because that's what normally happens. We get a 10 to 15% correction out of the markets, gets people scared, gets people freaked out, and then we go for a big run. So we can see what's happening there on the Dow Jones low and a higher low through here. But we are starting to get a bit frothy here, so I wouldn't be too surprised if we're going to see. I wouldn't be too surprised if we are going to see a bit of a rollover soon, and get people freaked out. Now, again, I could be wrong, but the rollover is probably likely to be very, very short-lived. Like the S&P 500, we're getting a little bit of a rollover through here, but you can see here we had a low and we had another higher low through here, so we are slightly pushing up. Again, I'm looking at these markets, and I'm just like, I see a very frothy top, sort of rounding top movement here happening. The hard thing about trying to pick a top here is just with how much fuel, how much fires underneath these markets. So we could be creating a bit of a head and shoulder on the S&P right now, and so if we start to see something like that coming into the next couple of days, then this would be a shoulder, head, and then also a shoulder formation, and then we're likely to roll down, and then that's when we're probably likely to start to see a big movement on the downside when it comes to the Dow Jones and also the S&P 500. So just be prepared for that, guys. But I'm more swaying, for me personally, I'm more swaying towards, on the S&P and the Dow anyway, I'm more swaying towards just the market just to continue up from here, because we are just crazy to the upside right now. But it's always hard, right? Because we have this massive sort of stimulation and 0% interest rates, which caused a massive sort of floor underneath these markets, and also what's happening is that now we're actually in a massive bubble territory. So for me personally, S&P 500 and the Dow Jones, if we do the thing you want to look out for is that if we do start to create that rounding top right now, or we start to get that sort of action coming into this week, then we're probably likely to see a very strong pullback. That may be the start of that pullback in the markets. And looking at the Nasdaq is the one that's actually been the weakest one out of the whole lot. We can see that it actually made a low and it made a lower low. So the tech stocks are still much weaker when it comes to the when it comes to the tech stocks. So the tech stocks to me are still in very warning territory. The Dow Jones and S&P are not so much warning, but the tech stocks are. We're getting a major lower low through here. If we have a look at, say, things like Amazon, and if we squeeze our Amazon chart up, look what's happening. We were in this triangle pattern, and now we've actually broken down. So this could be some sort of a lower high. If we get a little rally up and then we start to do something like that and a roll down, that could be a movement to that. That could be this could be a little bit of a rally up to the upside and then a roll over. So this is still creating a warning, and this is where the devastation still could be happening. Obviously, the title of this video could be happening in the tech stocks. You look at, say, things like Apple. Apple created ran up to all-time new highs here around 140, and then it's been crumbling ever since. So I still see probably a bit more devastation coming into the tech stocks here. That's Apple, that's Amazon. Even look at something like as Netflix as well too. Netflix has just been getting hammered. We're still here, so I personally do see, guys, a bit more downside coming into the tech sector. The S&P 500, we actually could be rolling over as well too there. It's hard to say. And guys, at the end of the day, what I do see is that whether it's starting now or whether it's likely to happen moving forward, meaning the big devastation crash, it's going to happen. And please, if we do start to see a melt up phase, that I do see coming. If we get a pullback happening right now in the S&P and Dow Jones, get a 10%, 15% correction, I believe that's not the start of the crash. I mean, the big crash, right? what we're likely to see is if that happens, the market's likely to go back up to all-time new highs. We're probably likely to hit a 40 or 50,000 Dow, I believe, at least a 40,000 Dow, before we start to see something like that massive top action happening. Again, it could be happening right now underneath our feet, and we just don't realize it, because we are getting a lot of volatility in these markets here. So right now, guys, my stance is a lot more bearishness in the actual the tech stocks, but we have to wait and see what's going to happen with the S&P and the Dow Jones. If they do start to roll over, then we could see a lot more downside to come. But when this crash eventually does start, it's going to be the worst one in history. Hope you guys enjoyed this, guys. Make sure you go down to John's Flash Sale, where you can grab my trading course for $7 only. I'm running a bit of a sale. So go to johnsflashsale.com and you can grab my entire stock market breakthrough trading course to help you get ahead in the markets. Like, subscribe, guys, and I'll speak to you guys real soon.